Hi guys, let's do a live trade on Gann Box. Now, I'm selecting the Gann Box. I've selected 1 hour. It's a Wipro limited company. And I'm selecting the low to the high. Here we go. Now, I am just copying and pasting. And here we go. So now, I've just copied and pasted it here. From this low till this high was this first Gann Box. Now this is the second Gann Box. Now if you look closely from 377.20 where it is currently trading, the first end is this 50% mark, which is at 375. Then it goes to 371. Now if you look closely and if I select a horizontal line based on this level, it shows you that this level was the highest point in the previous trading levels. And if I get another horizontal line and put it on this level, it shows you even this level was stronger. Now 50% mark, as we discussed earlier, is an important level. So if we trade from 377, the first target of 375.20 is easily achievable, which is like $2 of local currency. It's 2 rupees of local currency. So we can easily earn that. Now, as a day trader, you should always aim for the least amount of profit, but a profit. The point is, see, what I've seen in day traders is they aim for a higher profit, but in day trading, you should never aim for higher profits. You should aim for smaller profits, but eat it and run away. Now, I'm not saying a $2 profit is good. I'm not saying that. But what I'm trying to say is, if you're aiming from 377 to, let's say, the bottom of this Gann box, 361, then that's like pushing it out. Never push it out. Always see the complete horizon. Now you can aim for this level, which is 372. So you can like exit around 373. It's easy. It's like it can be done. But if you look closely from 377 till 375.40, that's about a dollar, 1 rupee and 50 pence or 50 cents of like gain. 50 paisa of gain. So basically, it's not a big deal. 3.77 is 1% profit if you go from percentage level. From 377.50, 3 rupees 77 cents or 77 paisa is the 1% gain. So $1 80 cents or 1 rupee 80 paisa will be 0.5% gain. So if you can earn a 0.5% gain in each trade, then isn't it brilliant? If you can earn, let's say, 0.25% in each trade, it's a brilliant earning. So always aim for a lower profit. Number one. Number two, try to grab things which are already working in your favor. Now, what do I mean by that? If you look at it, the candlesticks are all moving up. Then it suddenly falls off and makes a red candle. So it shows a change in trend, a complete like picture of change in trend. Now we can easily presume that the trend is down. So your like presumption should be easier. Number two, you don't need to make trade each and every time, each and every hour. You just need to make few good trades in a day and exit. Now, if you look closely, where can we place a stop loss? Because that's the number one important thing. Where can we place a stop loss? As we are considering short sell, buy, stop loss, and profit. Now the current level is 377.40, 377.40. Now if we short hit here, we can easily aim for around 375.50, 375.50, which will be 1 rupee 90 paisa like profit, which won't be enough, but basically it shows us that if we can make 0.4% profit on trades, that's not a bad profit. Now where can we put the stop loss? Now the stop loss will be on the previous major candle, this candle. Its open is 380.20, its high is 381.10. So 381.20 or 381.30 is your stop loss. Now this is where everyone asks me a question, that your stop loss, the risk, is far higher and the earning is far lower. And basically, you are presuming it correctly. This is a problem. But the point is, in day trading, it's always, the risk is always higher. That's why you should trade the longer run, daily or weekly chart. In weekly chart, your risk will be reduced because usually it goes in the longer run. And if you look at it on the shorter run, you can easily see change in trends. But on the hourly chart, it's far difficult to pick the change in trend than to change your position. So you need to take a higher risk initially. That's what day trading is. The risk is higher initially, but you need to always put the stop loss. You cannot trade without a stop loss. Rule number two. Now let's presume we are not aiming for 375, we are aiming for 372. Let's presume this. If the price falls, then you can automatically change your stop loss from this candle to this candle. Basically, this is what the stop loss aim is. It should get reduced. But as your profit is extremely close, so we won't be able to change the stop loss. So this is how it goes. Let me initiate the trade. I will make the call. Thank you. Hi guys, I've initiated the trade at 377.60 with buy order already placed at 375.50, stop loss already placed at 381.30. So basically at the start of the trade, I have placed all the orders so that I know what the end is. This is a rule that almost all beginner traders or novice traders forget, and you should not forget that. In a day trading environment, you should have the end in your mind. It's not a weekly or a monthly trade where the end will come after many months or after many weeks. It's a day trade. So in a day trade, you should have covered all your angles. Most traders don't. You need to do this. This is the rule number one. Please don't forget it. Now, another thing that I want to tell you is open a demo account. Try this strategy. Don't try this strategy from day one into the real account. The reason? The reason is we all are human beings. We all have emotions. Now, when you're trading in the market, sometimes you hear tips. People will tell you this stock will go to 500. Now, you are a day trader. How can you believe on those tips? Either you are a weekly trader, then it's a long horizon game. Even then, those tips are not like part of the game plan. But this is the mistake that day traders do. They hear the tips, which are usually the long run tips, and they are betting on the short run. That's the biggest mistake. So what I am really trying to tell you is your emotions comes in. Your emotions tell you to, okay, aim for this level. Now, if you look closely, this level, if I put a line, horizontal line right here, This level is achievable, but it will take many hourly candles. In stocks, you have a limited time window. You can trade after market. But the basic point is in aftermarkets, volume gets like extremely reduced and you're basically taking a risk. You're taking the risk home. So why take that risk? Look at the long run. If you're aiming for such a different level, such a lower level, then you're increasing the risk as well. In a day trading environment, usually the successful traders eat the profit and run away. Eat the profit and run away. The aim is not to make $100 billion in a day. The aim is to get lower profits, but confirm profits. Now, another thing to note is action stop loss or action order. Now, action order is if you see a slight change. Example, this green candle eats the previous one. Then you can automatically go and square the trade. Now, this is a thing that you need to pick automatically yourself. Now, what do I mean by that? Now, this red candle eats this green candle, right? Now, if you have learned candlestick, you would know that this basically means a change in trend. But if you look at it, this green candle eats this red candle, this big green candle. Now, if you don't know candlestick, you can take my candlestick course, but if you know candlestick, you will understand what I'm saying. This red candlestick eats this green candle, so it's a change in trend. But this green candle eats the red candle, so it says that the continuation trend is up. So let's presume you short sold on this red candle and this green candle comes up. What will you do? Will you sit with your earlier presumption that the market is going down? No, you won't. You're seeing that the market is going up. So you will be squaring it off and you might be buying to take the advantage of price going up. But most traders, they stick to their assumption of right here that the market is going down through this red candle. And they get stuck this candle. And they get stuck here and there's losses and losses. That's what you don't need to do. So you need to keep in mind the stop loss is something what I call the flash rise or flash crash kind of a thing. If it hits that, you need to have a level to exit. Number one. Number two, action stop loss. If the price suddenly rises up and closes this candlestick, closes here, it eats this candle, then this is a really problematic thing. So you need to cut your losses and exit. This isn't really important. Now, how do you know it will do that or not? Let's see in the example going forward. Thank you. Hi guys, let me show you. Our trade is automatically completed because it has hit our buy order and we are in profit of 1.8 1 rupee 80 paisa profit. So basically we have ended the trade in a good profit, which is about 0.5% profit, which is brilliant. And if you look at it, the price is still continuing to go lower. Now, although I had planned for this live trade to discuss it later, but now as the trade has gone through, so let me discuss right now. These levels, the time zone level, are important. So if the price is going lower, we can aim for this time zone level. This is an important thing. Let's presume we had aimed this level as our buy order, not this level, this level. The price is falling, but let's presume it would have gone straight. Then on this level, we would have think on it that okay, let's see, should we do something else? It's like a timed levels that help us initiate the things. As we discussed earlier, on these levels, the price usually changes its direction. But this is an hourly level. So on an hourly level, that thing won't really gel in. It will work most of the time, but most of the time it won't work. The point is to analyze on those levels, should I do something else? This what I call the moments of thoughts. So that if you're in profit and you're seeing something odd going on, just exit. Thank you.